After Coinbase reported earnings and surprise losses, Wall Street simultaneously turned extremely bullish on crypto market. Their expectations are out of the box, numbers that you haven't heard recently. Look at this. We're looking at Citi base case scenario, not extremely bullish, not regular. We're talking about base case scenario for Bitcoin price target for the 12-month horizon will be at $143,000. This is a completely, regular, normal adoption prices related to institutional or government adoption, holding periods, national reserves, etc. Also, they have another more bullish case scenario at $189,000, which effectively signaling very strong institutional demand and potential ETFs filing for the other coins as well, not only for Bitcoin. We saw already with Ethereum, we saw already with AVAX, we saw with Solana. Very important, Goldman Sachs also is lining up with bullish expectations for 2026 regardless of the current price action. They're noting something very interesting. They said that the main constructive obstacle for crypto so far has been, again, a regulatory burden, which no longer be the case simply because we're very close to signing the Clarity Act, which will remove the bottleneck for crypto moving forward. This could actually be the last step, the last big hurdle on the legal side for crypto, stopping it to make new all-time high. Also, very important, a lot of these analysts on Wall Street are very comfortable with Bitcoin upside potential and looking at prices nearing $200,000 per one Bitcoin, and all this happening in 2026. These milestones, of course, are consensus. This is not out of 100 firms on Wall Street, 2-3 which are known to be bullish on crypto to be giving bullish expectations and high price targets, which will not be ethical, of course, and will not be a good base for comparison. We're talking about consensus, which means all the firms that are known to be successful in the markets, they have successful track record for many years. Their consensus, they all agree that there is a bullish 2026 ahead for crypto. They're focusing not only on the prices, but let's look at the exact coins and what is the date by date or month by month basis where the big moves are expected. So first of all, we're looking at Tom Lee. We all know he's big on Ethereum. He is expecting Ethereum to range between 7 to 9,000 in 2026. He was wrong. For the beginning of this year, he was expecting very strong January. But January, we had a tailwind that was not related to crypto. Basically, all the markets down. So this was not something that could have been predicted. But he's looking at least this range to appear, or these levels, Ethereum to be reached by 2026 in the $7,000 to $9,000 range. And Tommy has been very successful by it, right? Also, ARK Invest, Katili, they have been very bullish on crypto overall. They have been discussing new strategies and they're kind of shifting towards on-chain infrastructure. So they're kind of trying to find the new 10 baggers, right? Coins that most people do not know about it. So they will be betting on coins that are part of the infrastructure that soon will be used, right? So far, no one is actually using it. Third important element over here, there's a new narrative that shifts around the ETFs, right? After we saw the Bitcoin ETF approval, then we saw the Ethereum ETF approval, then we saw Solana, then we saw AVAX, right? So this is opening a brand new door for liquidity pools, which means that every coin and all the teams who are working behind these blockchains and the coins with the blockchains, they are incentivized to grow the infrastructure and the systems bigger and bigger. They have more interactions, they build on chain, they offer different gaming projects, they support different financial products as well. So this is good because this will allow a lot of these investors to actually see perceived value and intrinsic value, which will reduce the sell-offs. Because now a lot of the coins are, 100% speculation, because they're not really backed by some actual revenue that could be tracked. They're not actually backed by, FDIC insurance. They're not actually vetted or tested or, audited by the SEC. So all these things are kind of in the air. But when you see some of these companies who are, let's say, deeply involved into the government or financial systems, let's say, for example, XRP. Let's say XRP is used in financial transactions within the banks, internally or externally, right? This is some validation. Let's say if the government uses particular coin, uses the technology behind the company who created the coin, created the blockchain, then there is intrinsic value. It's obvious intrinsic value, right? So this is why 2026 will be very, very important. And a lot of people who now are very negative, they don't really see, they cannot see what is behind this red wall. Third important element over here, the clarification around the price targets. I think this is something also very important. So first of all, where the 200,000 or 150,000 price target will actually be coming. So analysts from Wall Street are matching two pieces together, which first of all will be on the legal side, high liquidity and rate cuts. On the other side, they're looking for Clarity Act and additional realization of the Bitcoin as a store of value. This is two elements that should play out. And Wall Street thinks that if this actually happened, Bitcoin could propel to $200,000 and Ethereum towards multiple thousands. Okay, they don't give you the exact number. Remember Tom Lee looking at the range around 7 to 9,000 or 6 to 9,000. They're also agreeing, but they're a little bit more skeptical to Ethereum. They're afraid to give you price target. But you probably wonder why they're so okay to give you the $200,000 price target for Bitcoin, right? This is something you should really think. Try to read between the lines. Of course, nothing is guaranteed, but if we see all these to-do list check marks appear, right? We have the Clarity Act signed. We have all the Bitcoin and other cryptocurrency systems being validated, implemented, and used not only on the private side, but also governmental and let's say institutional. And last but not least, we want to see the new Fed chair actually supports the Bitcoin. Because we already know and we heard that he's against de-dollarization trade, so effectively he's against gold and silver. So the question is he going to be pro-Bitcoin? Because he is going to be pro-dollar. This is the second and last thing that you want to pay very close attention to.